Okay, hello people. This is an introduction into Ascendas REIT, which is a REIT based in Singapore. Right, the slides that will be shown are based off its annual report dated 6 April 2022. Right, do note that I'm not a financial advisor. This is not financial advice. I may make mistakes and do not guarantee the information shared is all correct. So please do your own due diligence. Right, let's dive straight in. Okay, by geography, Ascendas REIT is mainly invested in Singapore with 61% of its portfolio by asset value located in Singapore. This is followed by Australia and United States, which are quite small at 14% each, and even United Kingdom and Europe even smaller at 11%. Right, so by segment, they are mostly in the business space with 48%, followed by logistics, industrial, and data centers, which I believe is a rare, not a rare, but a recent entry for Ascendas REIT. Right here, I just want to focus on their strong balance sheet. Right, they have healthy aggregate leverage of 36%, credit rating by Moody's at A3, which is very high for REIT. Alright, so we look at their gross revenue over the last 5 financial years, which has steadily gone up, as can be seen by this arrow over here. Net property income follows. Normally in FY 2019 does not have to be taken into account because it's just that they changed the way they report their financial year from April to March to calendar year, which is January to December. Therefore, in this FY 2019, there was only 9 months worth of revenue reported, right? So this number is an anomaly and can be ignored, right? So likewise with all the FY 2019 numbers, you can ignore them if they are artificially low because of it being only 9 months as opposed to the rest being 1 year, right? Amount available for distribution, same trend as the past two charts. All right, but this doesn't imply that unit holders are benefiting, as we'll see later. Right, net asset value per unit. Right, this one directly benefits unit holders. So if you had a stock, you had a share in FY 17-18, the value of that, the net intrinsic value of that share will have gone up from 2.12 to 2.38. All right, so that means that if Ascendas REITs liquidates everything and sell off their stuff, you should get $2.38 back. Alright, the current price of Ascendas REIT is 2.82. Right, so this suggests that there is confidence that Ascendas REIT has something, some unique value proposition about it. Maybe has very strong balance sheet, maybe one of the things that is being considered, and therefore there's a premium associated with Ascendas REIT. Alright, so 2.82 is above the net asset value that is currently valued at. Alright. Right, number of properties steadily going up, total assets going up. This is the matrix that most investors are concerned about. Distribution per unit going down, unfortunately. As you can see, FY 17-18 to FY 18-19, it went up slightly, but the last 2 years have been quite bad, right? So they haven't even gone past FY 17-18 yet, right? So dividends distribution per unit has gone down. That's not a good thing, and the primary reason why is because the number of issued shares has gone up, right? So you can see the rising revenue actually in front, right? Rising revenue, net property income, and available amount for distribution, even though it went up because of the rise in number of shares. Right, the distribution per unit has gone down. Right, so not a good thing for shareholders. They would not be probably too happy about it, although maybe COVID has something to do with it. Right, leverage always very well maintained. Right, not going to talk about this. Borrowing has gone up, right, to purchase new properties. Right, so performance in 2021 has been decently good. Right, occupancy has gone up to 93.2% as opposed to 91.7%. Right, rental revisions have gone up 4.5%, generally a positive thing. Right, so they waive some part of their performance fee, so that because of rental rebates. Okay, this is due to COVID situation. They gave some money back to the tenants. Right, so the DPU is higher this 2021 as opposed to 2020, but note that we are still lower than FY 17-18 and 18-19. Alright, so NAV has gone up, so yep, this is one of the positives. Right, Q&A with CEO. Alright, I just took out the important part. They have pretty good borrowing costs. You can see 300 million here at 3.75 and 7 years, right? So yeah, this is very low interest, right? For most of their borrowings, almost 80%, they have hedged their interest rate for 3.5 years. So in the near term, the rising interest rate should not hurt them, right? However, there's a part of their portfolio that is unhedged, right? So this will be exposed to interest rate increase, and every time interest rate increase by 1%, their DPU is expected to drop by 2%. Right, but they have strong credit rating, right? So Moody has an A3 credit rating. They should be able to easily find debt. Right, so here is their debt maturity profile. So I think it's pretty well spread out. So it appears to be a good thing, right? Perhaps that's why there's a slight premium to Ascendas REIT's valuations. Right, with that, I'll end this short introduction. Thank you very much for your time.